Welcome to It Depends, a sales tax podcast by TaxConnex. I'm your host, Brian Greer. Sales and use tax can be confusing and very overwhelming, but it doesn't have to be. Whether you work in industry or at a CPA firm, or just someone who wants to stay informed about the latest sales tax laws, we've got you covered. Periodically, we'll explore different aspects of sales tax. So whether you're a tax pro or a novice, tune in and join us as we attempt to simplify the complexity of the sales tax world. This is It Depends, because with sales tax, there's rarely just one answer, and often that's our answer to many questions. It just depends. Good afternoon, everyone. So kind of the topic is finding the right sales tax compliance provider. And in reality, that might include more than just one firm. So we'll kind of talk through that and the different steps to identifying what your sales tax requirements are, what some of these steps in terms of putting a process in place would look like, and then also looking at potential outsourcing options to manage some of the process for you. So as we get started, sales tax can be super complicated. In reality, it is, but I always try to boil it down into some simple concepts and simple terms that make it easier to talk about and think about. So when I look at sales tax, I really divide it up into kind of three primary areas in terms of what you need to do. Obviously, there's a lot of different steps inside each one of these kind of major categories of activities. But the first one I think of is really just understanding what your requirements are. And I'm going to drill down into each one of these in a little bit more detail. But really understanding, what are your sales tax obligations? Where do you have nexus? Where do you have taxable sales? Where do you need to register for sales tax purposes to collect that applicable sales tax? The second kind of primary bucket or area is really determining how to apply sales tax to your transactions, either from an invoicing perspective or within the shopping cart. And then kind of the third category that I think of is the ongoing administration of registering in states, filing the returns, remitting payments, monitoring nexus, and so forth. And as we talk through this here this afternoon, you'll see that certain solutions fit well in each of these different categories. So if we drill down and take a look at that first primary bucket, I'm not going to spend a significant amount of time on each one of these topics, but it really starts with that nexus identification. So where do you have nexus for sales tax purposes? As we've all seen, that's changed significantly in terms of how we identify and define that over the last, it's hard to believe, over the last almost 6 years now since Wayfair passed, where we now have this economic nexus standard. We also have a proliferation of remote workers, working outside of our home state. So there's this confluence of a lot of different factors that are changing the nexus footprint that a lot of businesses have. So the first step is really understanding where you have nexus. And then in those states where you do have nexus, looking at how those states specifically tax your products and services. Again, you may have seen in your own examples that you have certain products or services that aren't subject to sales tax collection. So just because you have nexus in a particular state doesn't necessarily mean that you have a sales tax obligation, specifically if that state does not tax what you're doing. An example of that, of course, would be TaxConnex and the professional services that we deliver would not be taxable in most states. There are some gross receipts types of states where what we do would be taxable, but for the most part, a professional service is going to be exempt or non-taxable. So you need to understand where you have nexus, where your products products and services are taxable. And then you need to look at, do I have some type of historic exposure? So if we have a sales tax obligation prospectively, maybe we had one historically as well. And we just need to identify that and recognize that as well, and then come up with a appropriate path to get into compliance. You see a few different options there, ranging anywhere from voluntary disclosures to registering and complying prospectively. One of the primary advantages, or some of the primary advantages of a voluntary disclosure would be a guaranteed waiver of penalty, but also a limited look back in terms of the tax periods that you have to disclose to the applicable states. Usually we're looking at about a 36 to 48 month look back period from a VDA perspective. And what's interesting, as Wayfair has gotten older, and as I referenced, it's almost 6 years old now. If we go back a couple of years ago, most of the businesses that we talked to that had nexus due to economic nexus purposes, those businesses really didn't have any liability outside the look-back period, because those economic nexus rules were fairly new, and we were generally within that look-back period. Now, as we start to work with companies, we're seeing more and more they have sales tax liabilities outside the look-back period, and these VDAs become a little bit more enticing to perhaps waive a year or two or more of taxes that we didn't collect. So in this kind of first major category of sales tax, this is all consultative, in terms of whether that's something that you do yourself or hire a firm like TaxConnex to manage. It's really not something that you can automate. It's something that you really need a person to review these different steps and to come up with the appropriate path forward. The second piece that I had referenced initially is, how do I now add sales tax to my transactions? And again, that could be either in a shopping cart, or it could be from an invoicing perspective. A lot of different options here, depending on your unique scenarios. In this category is really where we see automation having the biggest play and the biggest advantage in terms of automating the sales tax process. I'm sure a lot of you have looked at and are familiar with some of the different options in this area, but the baseline accounting systems and shopping carts, they're actually becoming more and more sophisticated from a sales tax perspective, and having some built-in rules and capabilities to be able to apply the sales tax just within those baseline accounting and shopping cart platforms. However, depending on the complexity of your business and depending on the types of products and services that you sell, there's oftentimes scenarios where you may need some type of third-party software to help calculate the sales tax applicably. Good examples of industries that are very well suited for a tax automation solution in this phase would be telecommunication services companies. The tax regime is extremely complicated for telecommunications providers. Also, software as a service companies, where the taxation or the taxability rules differ significantly from state to state. Excuse me. Another factor to consider here is just how many invoices you have each month, how widespread you might be in terms of how many states you're in. But this is where we see solutions like Avalara, Thomson Reuters, CCH SureTax, CiraTax, TaxJar more recently, Sovos is another one. those are probably the primary sales tax automation solutions that we see. And again, I think very advantageous in this part of the overall process. And when you start to look at those different software solutions, I really, in terms of kind of picking the right one and the best match there, I really try to look at it through two different lenses, and one being whether that tax calculation software has integration already established with your financial system or with your shopping cart. That's often the kind of the cleanest, easiest pathway. Certainly, most of those solutions have fairly open APIs, most of those solutions being the sales tax calc engines. They have open APIs that allow you to integrate to different systems, but if you can find one that's already integrated with your financial system, it just kind of shortcuts the process a little bit, and it's a little bit more advantageous. The other factor that I would look at and consider is whether the particular calc engine aligns with the types of products and services that you actually sell. A good example of that, we started working with a business recently that had a tax calculation vendor already selected and in place, and come to find out it didn't have the right categories and the right taxing rules to apply tax correctly. This particular client had some streaming services that were subject to some fairly unique rules. Specifically, oddly enough, there was a Chicago amusement tax that was applicable, but also a Florida communication services tax. It wasn't a communication service that they're selling, but Florida's rules are pretty widespread in terms of trying to capture businesses into that CST. But the bottom line was, for this particular business and what they were selling, they didn't have the right categories in the taxing engine to even apply the tax correctly. So very important to understand, what you're selling and what categories are supported within that tax engine that you might be looking at. Kind of the third piece of the puzzle that I had referenced initially is really kind of the ongoing filing and remittance piece. I referenced this before in terms of getting your sales tax registration set up. Sometimes a lot easier said than done. There are, especially in a scenario where you might be a foreign-based seller, more and more we're working with foreign-based companies that are trying to comply with sales tax rules in the U.S. But regardless, a business is going to have an EIN. Not a big deal if you're a U.S.-based business, you're going to have that. But you're also going to have to supply and provide various details on corporate officers, usually social security numbers. Some states might have copies of driver's licenses. It's a fairly invasive process if you've not registered in the past, but there's a lot of documentation that the states want. And they want to be able to hold somebody accountable to their sales tax rules is part of the rationale and the reasoning for asking for some of those details. Also within the overall compliance process, you need to consider the fact that there's not just state level reporting, but there's local level reporting as well in certain states. Colorado, for example, Alabama, Louisiana. I've seen scenarios where some of the aforementioned sales tax calculation solutions are not capable of calculating and/or remitting tax returns in certain local jurisdictions. Colorado is especially problematic. So again, understanding what your requirements are and aligning those to a particular provider is very, very important. Remitting the payment, of course, is part of this process. I think all of the states now accept some type of electronic payment. Usually you can debit those directly out of your bank account. Depending on the type of business that you are, and where you operate, you may have paper-based filings and actual checks that you have to cut and remit to the taxing jurisdictions. Very prominent in the telecom area, but seems really odd in today's technology world that you have to, physically mail in a paper return and a paper check, but it happens, especially in some of the local jurisdictions. Other important factors to think about and to be aware of are managing notices. These could be paper notices, but more and more these are posted in the e-file accounts for the various states. Again, what we see in some scenarios is that some of the software solutions that do have some capabilities of filing returns, they're not necessarily looking at and managing notices on behalf of the client. It becomes the client responsibility to look for, interpret, decide what to do with the notice. Maybe it's a change in filing frequency that needs to be communicated to a software solution, but somebody's got to be looking at and managing those notices. Similarly, from a nexus perspective, in terms of tracking where you have nexus, again, this is mainly as a result of Wayfair, but looking at those states where you may have exceeded the economic nexus thresholds. Some of the software solutions do a good job of tracking the sales activities and alerting you to when you might have nexus. However, those solutions may not give you the full picture. Specifically, if you have other platforms that you're selling within, even if you're selling on Amazon, and Amazon as a marketplace is collecting and remitting the applicable tax for you, those sales in the vast majority of states, those sales in the marketplace will contribute to economic nexus in the vast majority of states. And if your tax calculation solution is not integrated to the Amazon platform, it's not giving you a full picture as to what your nexus footprint is. So where I typically see outsourcing and technology kind of where they fit, I'm gonna kind of skip back here. The technology is really good in the second area, automating the tax calculation and tax application. And then typically what we're seeing from an outsourcing perspective is certainly in the first category, but really on the last category there in terms of managing the ongoing filing and remittance process. So let me move forward back here and take a look at, what would be some specific reasons why you might consider or look at outsourcing. And just over the years, these are different kind of, triggering points or different scenarios that we see where people come to us, for example, and say, you know what, I just need some help managing this. I don't have the enough bandwidth to do it myself. I can't hire anyone. I don't know. I don't have the knowledge as to how to do this myself. But some of these are all reasons why companies start to look at outsourcing. That first one has been big over the last, again, 5 or 6 years due to Wayfair. A company that's in 1 or 2 states historically now all of a sudden realizes that they're in 20 states or 30 states, and it's growing and increasing. Well, what do? They probably or might need some type of sales tax automation to calculate the tax, and then they need someone to manage everything prospectively for them and alert them to additional sales tax filing obligations as they go. Often see scenarios where an in-house process is working very, very well, and then all of a sudden an individual either moves into a different part of the organization, or maybe they leave the organization entirely, and now there's this gap where the sales tax filings aren't getting done the way they need to, the way they have been done historically in-house. But you can see some of the other examples there. A lot of different reasons. These are just kind of the the primary reasons that we've seen over the years in terms of, what leads people to outsource the sales tax process, and probably not too dissimilar from other outsourcing scenarios, even if you look at it from a payroll processing perspective. I wish I knew what the statistics were, but I have to believe that most organizations outsource their payroll. But it really is, it's a complicated process. It's repetitive. There's generally not a lot of internal knowledge on how to manage it. You can gain access to a lot of external expertise by outsourcing that payroll compliance. Same type of deal here from a sales tax perspective. So when we look at potentially outsourcing and trying to come back to the overall theme here of the day was, what's the right match and who should I work with on this? These are some questions that I would suggest that you understand and align to your business in terms of what your requirements are. But really just understand, what am I getting? Far too many times I've seen people, press the easy button, so to speak, and really think that sales tax is fully managed and off their plate, just to be surprised by something that they weren't anticipating. Good example of that, recently heard from a client, actually it was a prospect, but it was a CPA firm brought one of their clients to us, and it was the state of South Carolina, where this business had a automated sales tax solution in place. Everything worked fine for several years, and all of a sudden there's a lien on their bank account in South Carolina. And they're trying to figure out, what went wrong and what's the problem here. When you start to kind of peel back the layers of the onion and try to figure out what happened, in the scenario ended up being that the client told the sales tax automation vendor that they were set up as an occasional filing frequency in the state of South Carolina. As a result, the sales tax automation provider never filed a return because in this example, there were no transactions in the state, not warranting any type of filing, not to mention that South Carolina doesn't allow an occasional filing frequency, but no returns were filed. The state had the client set up as a monthly filer, and as a result, there were multiple months of filings that never happened. There were notices that were posted to an e-file site that were never reviewed or responded to. And eventually, I don't know if you've seen states do this, but if you ignore them long enough, they'll have a tendency to issue an arbitrary assessment. That'll get escalated, and then eventually, if you're not responding, they'll put a lien on your bank account. That's what happened here, and the client was at fault because the client didn't tell the sales tax automation vendor what to do, that I need to file monthly, not occasionally. Point being is that there's a really, really good place for that automation. Again, I think it's in that sales tax application or calculation aspect of it, but there's got to be somebody that manages and looks over this kind of compliance, registration, filing, and remittance side of the equation. Even if you're utilizing an automated solution to file your returns, you got to be watching out for this. And I encourage businesses, if they're going down that path, you got to think of yourself as a sales tax manager. And as a sales tax manager, I'm responsible for the process, I'm responsible for all the decisions, and I'm responsible for telling my vendor what to do and when to do it. And if you're okay taking on that responsibility, then that's a really, really good option for you. It tends to be fairly inexpensive. But if you're in the camp of, I'm not a sales tax manager, maybe you're a business owner, maybe you're a controller, VP of finance, CFO, that doesn't have any time or training in managing sales tax, and you just want someone to manage it for you, again, that kind of points down the path of, let me outsource this and let me kind of have that person outsource the ability to watch over this and manage it for me, rather than try to do it yourself. So again, different questions here that I think are relevant. I referenced some of these earlier in the presentation in terms of some of these home rule jurisdictions. Colorado was one that I referred to earlier, where not every sales tax automation solution can calculate tax and file it correctly in these home rule jurisdictions. If you're looking specifically at outsourcing this part of the process, just know what you're getting into. How are they going to partner with you, and who do you have as a contact person to ask questions? Because what you're really doing, I mentioned it before, you're really gaining access to people and to expertise. You're somewhat acknowledging that I'm not a sales tax manager. I don't have the sales tax knowledge, so I need to get that from somebody. Well, how do you get that information? Do you call a person? Can you talk to someone and get that answer, or is it an online database of different content and information that you're directed to? If you get audited, what kind of support is there going to be for you? Is there someone that can manage the entire audit, that can guide you through the audit process if you want to manage it yourself? But again, just kind of getting a really good perspective on what you're buying, and just so you're not surprised. I hope what you take away from this presentation is the fact that there's a place for automation and technology, and we recommend sales tax calculation solutions all the time to our clients and to our prospects because it's necessary. But there are certain aspects of this that really require management by a person. And that's where I see this outsourcing really being a better fit, is in that, how do I get access to a person, and how do I kind of turn this into a done for you type of service rather than a do-it-yourself solution, kind of leveraging that technology. So hopefully that resonates. Thank you. Bye-bye.
This has been It Depends, with another episode explaining the complexities surrounding sales and use tax. We'll see you next time.